Red states versus blue states. Which part of America is going to get hit harder by the upcoming housing crash, and where should you definitely avoid buying a home or investment property right now? If you're a potential home buyer or real estate investor, you're going to want to stick around to the end of this video because the answer is going to shock you. If you're a consistent viewer to my channel, Reventure Consulting, follow me on Instagram, you no doubt understand two principal things. Number one is that I believe we are in a big housing bubble, potentially the largest in US history that's going to come crashing down very, very soon. But number two, you know that there's big differences between housing markets across America and that not everywhere is going to get hit hard in this upcoming housing crash. And on this channel, we use data to help understand the cities and the states most at risk. And that's why in today's video, we're going to introduce a new data point that maybe a lot of you aren't so familiar with or very comfortable with, in fact, but one that's extremely important to understand if you're a home buyer or real estate investor right now in the fall of 2021. What is that data point? It is political affiliation, how either Republican or Democrat a state is in terms of its voting and political leadership. That actually has a huge influence on its housing market. And in today's video, I'm going to give all of you guys the deep data on things like job growth, wages, home price appreciation, and home permitting, so you can understand what these tremendous differences are in housing markets purely based off political affiliation. And by the end of the video, folks, I'm going to reveal to you which is better. Which is better, red states or blue states for long-term real estate investment. Without further ado, let's get into the data. So the first place we're going to get started, everyone, is a map of the 48 continental states in America. And what are we looking at here? We are looking at presidential voting in the 2020 election. The states that are more blue voted more for Joe Biden. The states that are more red voted for Donald Trump. So for instance, a place like California, 64% of the population voted for Biden, 34% voted for Trump, which was a plus 30 margin of victory for Joe Biden and the Democratic Party. On the other hand, you have a state like Tennessee that voted 61% Republican, 37% Democrat for a 23 margin towards Donald Trump. And I'm sure many of you are familiar with a political map like this, but I really want you to burn this into your brain. Not only the states that voted blue or red, but how red or blue they were, because as we'll come to see, that's going to have a huge impact on the local housing market, how either Republican or Democrat a state is. Now, the first thing that we need to understand is that Democrat-run states and states that vote for the Democrat presidential candidate have much more expensive real estate. Homes are much more expensive in states like New York, California, Massachusetts, Vermont, and New Jersey. They generally have higher home prices than Republican red states. So for instance, according to Zillow, the typical price of a home in a Democrat voting state is $430,000 here in the fall of 2021. Meanwhile, the typical price in a Republican-run state that votes for Republican presidential candidates is only $240,000. Wow, folks, so Democrat states already have home prices that are 80% higher than Republican states. Now, why is this the case, folks? Why are home values much higher in Democrat-run states, 80% higher, in fact? And one of the principal reasons is income and wages. As you can see on this graph, the more that a state votes Democrat, the higher the average hourly wages according to the Bureau of Labor Statistics. So, for instance, Massachusetts voted plus 33% Democrat in 2020, voted for Joe Biden plus 33% over Trump. California voted plus 30%. Maryland voted plus 32%. These states, including Connecticut, Washington, New York, have some of the highest wages in America. And as I talk a lot about on this channel, wages and incomes have a huge impact on home prices, and those higher wages, higher incomes in Democrat-run states, Democrat voting states, are a big explanation for why their home prices are higher today. Now, most of you out there who are potential home buyers or real estate investors, I think the thing that you care about, and you can correct me if I'm wrong in the comments, but I think the thing you care about is not so much what are the prices today, but what are the prices going to be in 2 years, in 5 years, in 10 years? What are the states and cities in America that are going to have the most real estate growth going forward? That's the question that we're going to answer today. And one of the best ways to get started answering that question is looking at the demand for real estate and how much is demand growing, aka jobs and migration. Naturally, the more that people move to a city, the more that people gain jobs in a city, the more that home values will likely go up in those places going forward. And this is an area where actually Republican states have a huge advantage over over Democrat states. And you can see that represented on this graph where we're looking at the cumulative job growth across red states, purple states, and blue states over the last 20 years, folks. And what jumps off the page at you, at least this jumped off the page at me, is how much better red states are doing in terms of growing their employment and their jobs over the long run than blue states. If you guys are enjoying this video and you want to see more of this content going forward, there's an easy way to do that. Just hit the like button. When you hit the like button, it gets these videos out to more people, and I, in turn, can produce more of them going forward. Additionally, make sure to let me know what you think about this red state versus blue state real estate debate. I know a lot of you have opinions on this topic. I want to hear them below, so make sure to comment. So for instance, red states have seen a 17% increase in employment over the last 20 years. They've added 6.3 million jobs. Meanwhile, blue states have only seen a 6.2% increase in employment. That's an addition of 3 million jobs. That's unbelievable, folks, is that red states are doing almost 3 times better in terms of adding jobs than blue states. And you got to ask yourself the question, like, what's going on here? Why are red states so vastly outperforming blue states in terms of economic growth? Well, one of the key indicators, one of the key reasons is migration. Way more people are choosing to move to red states than blue states, and in fact, many of the people leaving blue states are going to red states. And you can see that evidenced on this graph where we're looking at the levels of domestic migration by voting. And once again, the blue line is blue states, the red line is red states, the purple line is purple states. And you can see here that blue states in general just lose tons and tons of people, like at all times over the last 30 years. Blue states are in the negative. More people are moving out than moving in. And at certain times, such as in 2006 and today, the losses get really severe. So for instance, in 2020, blue states lost 620,000 people due to domestic migration, while red states gained 287,000 people and purple states gained 337,000. So when you have decades and decades of people fleeing California, New York, Massachusetts, and New Jersey to go to warmer, greener, more affordable pastures in Tennessee, South Carolina, and Texas, it tends to eventually tilt the economy more in the direction of red states. And this is a key point that makes red states more attractive for future real estate investment, is that both in the short and the long run, red states seem to have a huge advantage in terms of adding people and adding jobs. Now, a couple caveats here. The first thing is that while red states dominate in terms of domestic migration, blue states actually do much better with international migration. However, the levels of international migration that blue states get do not come close to making up for all the people, all the Americans that leave those states. Additionally, red states do well in terms of adding all types of jobs, not just service and restaurant jobs, but actually science and tech jobs. Red states have done about 2 times better than blue states in adding science and tech jobs over the last 20 years. So it's pretty clear red states have a massive advantage in terms of demand for real estate, but demand is not where the story ends, folks, because I'm sure many of you know real estate is about demand, but also supply. How many homes and apartments are getting built in a certain city or state? This is just as important as demand for influencing where values are going to go in the future. And this is yet another area, supply and building of real estate, where there's massive differences by political affiliation. And you can see that represented on this graph where we're looking at a metric that I call permits per 1,000 people. And this is taking the number of home and apartment permits for newly constructed homes and apartments and dividing it by every 1,000 people in the population. So for instance, red states in 2020 had a population of 93 million and they permitted 522,000 homes and apartments. This was a ratio of 5.6 permits for every 1,000 people that lived there. And so the way to think about this more generally is we're just trying to answer the question, how many new homes and apartments are getting built per capita? And you can see this 5.6 in red states is double what blue states are building per capita. And what's really interesting about blue states is that over the last 5 years, the levels of building and permitting have actually stagnated and even gone down from where they were in 2015, which is absolutely crazy because in both purple and red states, the amount of building has gone way up. So I think a lot of you are wondering what's driving those massive differences in building, and a lot of it has to do with local zoning and permitting rules. In red states, the rules are very relaxed. Places like Texas and Idaho and Utah and Tennessee make it very easy for developers to build homes and apartments. The permitting situation is streamlined. You don't need to pay too many impact fees up front, and as a result, more homes and apartments get built. Meanwhile, in blue states like Massachusetts, New York, California, Illinois, New Jersey, it's much harder to build new homes and apartments. There's many more local rules and regulations that inhibit development, whether they be environmental rules, permit and impact fees, overall NIMBYism that doesn't like new development. Those things tend to happen a lot more in blue Democrat voting states, which is why they struggle to build enough homes and apartments for their population. The ironic thing about this is it's actually beneficial for local real estate owners because less new supply getting built means that there's going to be more upward pressure on prices and rents. And of course, this isn't good for society in blue states, that locals, particularly poor and middle class people, have to pay more and more out of their pocket for living expenses because not enough homes are getting built. That's not good for society, but it seems to be good for local real estate owners and investors. So this is an interesting conundrum, folks, in terms of trying to understand which states, which areas of America are going to have the biggest crash and which are going to do the best over the long run. We have a bit of a toss-up so far in that red states are better on the demand side, blue states are better on the supply side. Who is going to actually win out? And if you're a home buyer or a real estate investor today, is it red states or blue states that you should buy in? Well, I'm going to give you guys about 5 seconds for you to come to your own conclusions based on the data I presented, and then I'm going to tell you what I think. So here's what I think, folks. I think in the short term, over the next 2 years, I would rather buy in a blue state. From a purely real estate value-driven standpoint, I think blue states are going to withstand the upcoming housing crash better than red states. Because let me tell you, there's lots of red states that are in big housing bubbles right now. Idaho, Utah, Montana, Texas, places where home prices have exploded out of control and have a lot of downside. I don't think nearly as much short-term downside exists in blue states outside of maybe California, which is in a bubble of its own. However, most blue states have wages that are high enough to support the existing level of prices. So in the short term, I think red states are going to get hit harder by the upcoming housing crash than blue states. Now, in the long run, folks, over 5 years, 10 years, 15 years, I am betting on red states. I'm going to be a red state real estate investor over the long run because when you look at that growth, folks, look at that job growth overall. Look at that growth in science and tech jobs right here, science and tech job growth. That is going to equate to long run real estate appreciation. So even though I think a lot of red states have some short-term downside, Texas, Idaho, Utah, maybe even South Carolina, Tennessee are kind of bubbly right now and could have pretty big price declines over the next 2 years. In the long run, they have the demographic growth advantage, and that is ultimately what matters. And while I think blue states aren't going to get hit as hard in the upcoming crash, I see a lot of blue states entering a kind of long-term stagnation for their local housing market, where because there's really not much job growth, there's not much inward migration, these areas are going to struggle to grow real estate values into the future. Of course, everyone, real estate is local down to the metro, county, and even neighborhood level. So looking at state politics and state growth numbers is not enough. You're going to have to look even further into what's going on in your city and your neighborhood, which is something I do a lot on this channel. And if you want to see more of that data going forward, make sure you're a subscriber. I come out with 3 of these data-driven videos per week. Also, make sure to like this video. If you appreciated this content, liking this video will get it out to more people and in turn allow me to produce more of this content going forward. Additionally, also think about joining my channel as a sponsor member, folks. The cost is $5 a month and you actually get access to some really cool perks. Most notably, a monthly newsletter that gives you all of the key data, jobs, permits, wages, home prices on different housing markets and cities across America. So if you're someone who's trying to better understand what's going on in your city, or you want to find a new city for real estate investment, this monthly newsletter will help a lot. It's only available to channel members. Hit the join button below. There's also a link in the description, and make sure to pay attention to the channel member community board here on YouTube. That is where I post all of the newsletters, all of the exclusive videos, and all of the graphs is on the ReVenture community board. Now, before signing off, I want to address my background. A lot of you notice it's a little different than it normally is, and that's because I moved into a new apartment in Dallas, and I'm trying to change things up a bit, maybe spice things up, get more of a professional look in the background. Let me know what you think of this background in the comments. I'm probably going to be playing around with it for the next couple videos, so you might see some different things. Let me know what you think. Your feedback's going to be helpful ultimately in me determining what the right setup is going to be. All right, folks, until next time, this is Nick from ReVenture Consulting signing off.